candlesticks are essentially the language of the market. So if you guys don't understand candlesticks, ultimately you might have a hard time actually reading the market. And when you're looking at market sentiment, a lot of the times the language of the market, the feeling of the market, just looking at what other players in the markets are doing, it's very easy to tell what other people are doing by what the candlesticks are showing you, right? So candlestick patterns are one of the most powerful trading concepts. They're very simple to learn, they're easy to identify, and they're very profitable in setups. You can use them by themselves, and you can also use them with as confluence with a strategy that you already trade, right? And it actually has been, proven. Research shows that candlestick patterns have a high predictive value and can produce a very high positive result in your trading. So although candlesticks themselves are not really something that a lot of people really talk about, right? There's not a lot of videos on reading candles or candlesticks and that kind of stuff. They are a major factor and a major component in the market when it comes to learning. When you're talking about the language of the market, it's always very good to understand, okay, exactly what it is that you're looking at, and understand that when reading or when looking at the charts, the candlesticks themselves actually tell you a lot without even doing any markups, without doing any analysis or any of these things. You can simply look at a candle, and a candle will be able to help you kind of understand what's happening next, right? So I'll give you some examples of what I mean by that. When you're looking at an area like this, okay, and obviously the markets are coming down. So let's say you're looking to trade. This looks like an M. Well, this is an M. It doesn't look like an M, right? But you have this M pattern here. So you're looking for a trade, and you're seeing that the markets are moving down, and you're probably looking for, okay, it's starting to push back up. So you see it come down. They're starting to push back up, and the idea is that it's likely going to retest, right, a previous reaction area. So as you guys can see, within this little box that I drew, you can see some good reactions, right? You see a bounce here, right? You see some support here, some support here. So you see a lot of reactions within this box. This will be a good reaction area. Now, depending on how you're trading, some people might be looking for a retest. So for the market to come down, which it did, it starts to make its way back up right around this area. And the question is like, is it going to come back down? How do you know it's going to come back down, and when is it going to come back down? Okay. And when you're looking at an area like this, the one I just boxed up for you guys, this might be an area that might kind of signify or might kind of like help you a little bit with understanding, okay, this might be the area that we're looking for a retracement. So let's say you go ahead, and this is typically what happens with people. They'll see the market pulling up. They're waiting or looking for their entry point, right? They're waiting or looking for their entry. Then they get this huge candle right here, this huge candle down. And immediately they'll go ahead and they'll jump into this trade, panicking, thinking that they're about to miss the move. The market's about to drop, so on and so forth. And what happens right after that, as you guys can see, what happens? The market didn't continue to drop. So we got this huge candle down, came down to this level here, which we have reactions. It's probably level support. And then it made its way back up. Now, some people would have seen this coming back up, and again, they would have panicked. Right? They would have panicked. They would have been like, oh my God, it's going the opposite direction. And this is really only about 10 pips, right? But it's going the opposite direction. Maybe I got in too early. Maybe this is not a valid trade. Maybe it's not coming down. Maybe it's actually about to go back up. And when you're looking at this area, what I see is if you're looking at the very next candle, what do you see here? We see this huge wick on the top. So no wick on the bottom, huge wick on the top. Okay, what that shows me is that even though we did get like a push to the upside, and we might be in a little bit of drawdown in this trade, the buyers are trying to take control, and they can't really do that. So buyers were able to push the price all the way up here, but they couldn't sustain it, which is why the markets came back down and ended up closing here. And then if you look at the next candle, the same thing happened again. So this opened up bullish, and it did shoot up a little bit more, but buyers could not sustain it. So that's what we're seeing with these wicks here, right? We're just reading the candlesticks based off of the wicks. So we're seeing this push to the upside, and I'm still not in panic mode yet. I'm not worried about it because I can see buyers cannot maintain that momentum. They're having a hard time keeping the market up at that price, right? So then what happened? It drops back down again. And then we opened up the next candle, and it happens again, and it shoots up. But again, the buyers can't do it. And now the market's full. So my point is that all these wicks you're looking at wicks like this. These wicks are indication that although buyers are trying to take control, markets are being pushed up, okay? There's not enough strength. There's not enough momentum to keep them going up, and they keep falling back down. So eventually, support is going to be broken, and the markets are just going to drop. And that's what we see happen. Right? So see this candles area? It was broken. Market drops, come back, retest, break and retest, and then drop straight down from there. Okay, and again, that was with no markups, no analysis or anything. We got another example of this with the wicks right here. Wicks tell stories. Okay, so another example here. The market's shooting up, market's shooting up, market's shooting up. Boom. Okay, open up the new candle. Markets go all the way up to here. You guys see that? All the way up to here. Can't keep the momentum, so it drops down. Boom. And that's another candlestick reversal we're going to be talking about today. So I can go on and on. I don't want to spend too much time looking or talking about the market's candlestick. Here's another one. Markets pushed it up, couldn't sustain, so it comes down. We get the bearish engulfing, and then boom, markets drop. A few of the candlesticks that I use, I primarily use 6 candlestick reversals. And when I say use, I know more than 6, but these are like the 6 that I just like. They're just the easiest for me to identify. I've probably been using them more than any of the other ones. Like I've used tweezer tops, tweezer bottom. Like I've done those, but these right here, by far the easiest in my opinion. They were the first ones that I learned, and I think they're probably the most duplicatable to where, as someone that's brand new, you can learn all of them because there's really only about 3, and they're just opposites of each other, right? So let's talk about it. So first things first. Probably one of the most important candlesticks you'd ever learn in your career of trading is going to be the engulfing candle. Okay, how many of you are familiar with the engulfing candle? If you are, drop a 7 in the chat, and if you're not, drop a 1. Okay, drop a 7 in the chat if you're familiar with engulfings. Drop a 1 if you are not. All right, so how engulfings pretty much look is just like this. The engulfing candle is formed when it fully engulfs a previous candle. So whenever that new candle closes out, right, that you're looking at, it's a new candle that you're looking at, closes out, okay, and it fully engulfs. That means it just completely takes over from top to bottom the previous candle before it. Okay, that's considered an engulfing candle. And what that typically shows you, or what that typically means in the market, is that there is essentially there's a lot of momentum where there's a big push in that direction of the engulfing candle. All right. So at least one of the candles have to be fully consumed. Okay. Now, I would also say to be cautious of this, right? Because when you're trading engulfing candles, right? So like, for example, okay, this one's completely consumed. All right. Here's an engulfing here. Here's an engulfing here. Okay. So when you're looking at them, you want to get, I would say, a decent sized engulfing. And what I mean by that is that the engulfing candle shouldn't be too big. Because when an engulfing candle is too big, what happens is that typically you'll enter at the next candle and you'll always get a retracement as the market pulls back up a little bit. Right. And that's how they get people a lot. I'm trying to find an example of a candle that's just too big that people might have gotten into, and then you would pull back, right? Let me see. I mean, this might be a good example here. This is actually a perfect example. This is a weird example, but it's still very good. So you see this huge engulfing candle here, entirely too big. See, people would have gotten to this because, hey, you know what? The market's shooting up. Oh my God, the candle looks crazy. Especially if you're trading on a lower time frame than this, you see multiple candles popping up, right? Blue, blue, blue. But look how big this is. Huge engulfing. And then the very next candle literally engulfs it in the opposite side. So all it did was it kind of just got you. It was like a fake out. It's a reversal. It's how do you say it? I don't know how to explain it. I'm not the best at this, right? But it was there. It was put there on purpose, okay? So you want to be careful when the candle is too big. When the candle is too big, what tends to happen is it completes the move, right? So what I always look for, especially if you're trading a range, if you're trading quick reversals, is you want to make sure that when you get that engulfing, you still have enough room to go to wherever that range is closed at. So if we're trading, let's just say you're trading reversals in a sideways market, and let's see if I can get a good example. Okay, I'll use this as an example, but I want you guys to bear with me real quick, okay? So let's say I'm trading this for whatever reason. All right, I'm just trading these reversals, quick reversals here, down, up, down. If you're trading binaries, this will typically be you, right? Boom, 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 boom. Right. Okay. So let's say I'm trading in this area right here, and I get this engulfing here. But let's say hypothetically, this engulfing comes from here, and it engulfs this candle, and it closes all the way up here. So this entire square box is one candle. We're going to use our imagination here. Now, I don't want to spend too much time looking for examples. I kind of just want to get to, our lesson. Boom. So let's say this one box right here is one candle. So this is one big engulfing candle, okay? I personally, after seeing something like this, would not enter for a buy. I wouldn't jump into the markets for a buy right here. Okay. The reason being is one, because typically, okay, when you get a candle this big, the candle completes the entire move. So if we're looking at the zone, the zoned out area will probably be somewhere around here. All right, let me put this back. Okay, so it'll be somewhere around here. So we're looking from the top of this candle, and again, we're just using our imagination here. From the top of this candle to here, it's only about 2 pips. To the top of this area, this resistance, it's only 3 pips. Okay? So although, I mean, if you're trading like binaries, for example, that's still 30 points in the market, right? So like it could still clear. My point is that just as fast as it could go up and hit that, it could come right back down and stop you out of the trade, right? Or expire out of the money on that trade. This is just not enough room for me to be able to confidently get into this trade and say, okay, I'm going to catch this quick reversal to the upside. So although, you essentially do want to get good at engulfings and understanding engulfings, it's also, again, going back to that language of the market that we spoke about, is understanding that you just got to understand how to read it, right? You got to understand how to look for it, what it is that you're looking for. So you want to get a nice, decent sized engulfing. What I typically look for is maybe about double the size of the previous candle. Now, obviously, it depends on how big the previous candle was, but you're looking for at least about, I would say, 1 to 2/3 bigger than the previous candle. That's where you'll get some good, indication that the market's going to go the other way. Now, engulfing candles go both to the upside and to the downside, right? So if we're looking at some examples right here, when the pattern occurs, when we're talking about an engulfing candle, right? When an engulfing pattern occurs at the top of the market, so at the end of an uptrend, this is going to indicate that buyers are engulfed by sellers. Okay, they're engulfed by sellers, which now means the sellers are taking over in the market, and now the market is getting ready, if not already ready, to start dropping down. So when you're talking about the engulfing candle, you typically want to see that at the top of a market. Well, if you're talking about a bearish engulfing, the top of the market, you want to see sellers take control and sellers completely engulf the buyer's previous candle. Okay. On the flip side, you have a bullish engulfing candle, right? And the bullish engulfing candle is just the opposite, right? So you'll find the bullish engulfing, you would want to find it at the bottom of the market. Okay, and typically that's going to form at the end of a downtrend. So it's going to indicate that the downtrend is now likely over, because you're going to start to see momentum shift from sellers to now buyers are starting to take over, which is why you have this big candle pushing up, okay, engulfing the previous candle, which was when the market was pushing down. Okay, does that make sense? So you have the bullish and the bearish engulfing candle. All right. The next one, all right, is going to be another very important candlestick for you guys to learn, and that's going to be the doji. Okay. The reason why this is so important is because you have to be able to understand when there's indecision in the market, because a lot of the times you might be looking for a setup, or you might be looking for a trade, and you might be thinking it's going in one direction, when in reality there's a lot of indecision that's going on. And it goes back to what we spoke about earlier with the wicks, right? So how the wicks tell a story of essentially what's happening right now. So if we look in the same area, you guys see here, got the engulfing, markets start to push up. Okay, so from this point to this point to this point, right? Markets are going up. We can see that. So the markets are in a slight uptrend. Even though this is technically sideways movement, this is a range, it's moving up, right? We'll use this as an example. So as you're looking at this upwards movement, once we get to the top, which is right here, we see a little bit of what it is that we spoke about earlier, which is these long wicks. You got a wick on the top, you got a wick on the bottom. Long wick on the top, long wick on the bottom. Okay. Now here, not only do we have that long wick on the top and long wick on the bottom, but if you're looking at the body of the candle, there is almost no body here. There's no body on this candle right here, this long candle in the middle. This would be what we call a doji in the market. Now, there are many types. There's different types of dojis, right? But for the most part, it's just dojis. All right? So for the most part, they're just dojis. But there are many types of different dojis that you guys can essentially learn and tap into. What a doji would indicate is indecision in the market. So pretty much no clear direction of where the market might go next. Okay. Now, when you're looking at dojis, okay, the best way to use them is to understand how that indecision might work in your favor. And what I mean by that is that if we see the markets are pushing up, and then we get a doji at the top, that might be a good indication that the markets are indecisive, but they're looking to push to the opposite side now. So they're going to be dropping soon. Okay? They're going to be dropping soon. So although they indicate, for the most part, indecision in the markets with the long wicks, stuff like that, you can essentially learn to read them a little bit better to be able to tell, especially if you use them in confluence with maybe some other indications that you might use in your strategy. You use them together. Okay, and that might give you a better understanding or a better direction of where the markets are going to be pushing with the next few candles that come up. Okay, so when we're looking at, all right, I was wondering where that came from. Okay, so when we're looking at this, right, dojis are one of the most important Japanese candlestick patterns. Okay, when the candlestick forms, it tells us that the market's opens and closes are at the same price, which means there is equality and indecision between buyers and sellers. So this is exactly what we were just talking about. There is no one in control of the market as of that point. Okay. So again, when you're looking at the doji, it indicates equality. It indicates indecision. All right. And it will often happen during periods of resting after big moves. Right. So after big moves in the market, as you guys can see, from here all the way up to here, okay, you're going to get that indecision as the markets pretty much make that decision of where it is that they're going to be moving next. So if we're going to continue in that buyer's market, or if we're going to flip and come down to a seller's market. All right. When found during a continued trend, it is considered a sign that the prior trend is losing its strength. Okay. So exactly what we just finished talking about with candles and understanding the wicks. When you see them in a trend continuation, you see multiple dojis. What that is telling you, before the trend even ends, you might have multiple indications. Like right here, for example, you might get multiple indications that, you know, in this example, this is an uptrend, right? So you might get multiple indications that buyers are actually losing control. Why is this good to know? Because if you're in a buy right now and you see multiple indications that buyers are losing control, it might be time for you to start looking for your exits. All right, it might be time for you to start looking for your exits. Okay. So these, in my opinion, are also types of dojis, but they are different reversal patterns, right? Essentially, right? So you have the dragonfly doji and you have the gravestone doji. When you get a doji where the market or the price closes right in the middle or towards the middle of the doji, that's pure equality and typically indecision in the market. Okay. When you get one of these can actually give you a better idea or a better understanding of which direction the market might actually be moving towards, even though there is indecision in the market. So when you're looking at a dragonfly doji is a bullish candlestick pattern, all right, which is formed when the open high and the open and close are at or just about the same price area. Okay, so if you're looking at this, you can see you got this huge wick to the bottom. So markets opened here, you had all of this movement within that candle, but they ended up closing almost at the same area, and it just so happened to be at the top of that candlestick. That is a bullish move. Okay, so typically you'll see that a lot of the times. You'll see that at well, it has to close bullish, right? So you'll see that in the market, and that will essentially let you know, okay, again, it's indecision, but in this example, sellers couldn't hold, right? So you're going to see the huge push to the top of the candle. Okay, so it opened up here. They tried to push it down. They couldn't maintain that, and it ended up closing right back at the top. Sellers couldn't hold. Okay, on the opposite side, you have the gravestone candle, which is a bearish candlestick. Okay, a bearish candlestick reversal. And the gravestone is essentially the opposite of the dragonfly, right? But it's formed again when the open and close are at the same area, but this time they're at the bottom of the candle. Okay, so it opens up at this price. Within that time frame, markets moved up and down and moved up and down, right? It created this huge wick on the top, okay? But they couldn't maintain that momentum to the upside, and they ended up falling, okay, and closing right back down at the bottom. So again, although these are essentially indecision candlesticks, these, opposed to the regular doji, which is right in the middle, forms equality, right in the middle. These can kind of give you somewhat of an idea of where the markets are pushing. Okay, now it doesn't mean that they're going to push that way. No, it doesn't always mean they're going to push that way, because again, these are still indecision, right? These are still indecisive candles that you're going to find in the markets. All right, let's see if we can get any examples. What I would like to see are like back-to-back examples, right? So here's one of those examples, right? So as you guys can see, dragonfly. See dragonfly? Right here. All right. Comes down. You get the long wick at the bottom. Okay. Can't maintains it. Pushes back up. Closes at the top. And now we have the reversal. Okay. You guys see that? So something like that, right? I would turn on with looking at our strategy. Right? So something like that, you know, you might be looking at this, right? And you're going over like what it is that we speak about or that we spoke about last Thursday. How many of you here were on last Thursday's live with us? Who here was on last Thursday's live? Let me know in the chat real quick if you guys were on last Thursday. Okay, so we were going over one of my strategies that I trade for quick reversals. Primarily, I use it for binary options, right? Right? But we were just talking about, using the stochastics, using the Bollinger Bands, getting that confluence between them. Obviously, we got multiple indications here. We're at, just around some support. So you see here, we got wicks right here. And then that can be brought up all the way up to kind of like this area. So I would have zoned out this area as I was trading. Okay, we come down, the markets are coming down. We're looking for obviously stochastic cross. We're looking for Bollinger Bands at the bottom. Everything is looking great on this setup. And then we just so happen to see this right here, which is another confluence. It's another indication of what might be happening. So you see the markets are going down, but it can't maintain it. It can't hold it. So what it does, it pushes it back up. Boom, we go ahead and enter. And then you get the push to the upside. So you guys see that? You guys see how, like, you're using it in, conjunction or, together with your style of trading and how it is that you trade. Your strategy. Right? So there's a somewhat of a beautiful example of obviously a boom. All right. So let's continue on. Boom, boom, boom. All right. Here's some more examples of that. This actually looks very similar to the example that we just saw on the chart. You guys see that? All right. Boom. Okay. Perfect. Some more examples here. All right. Okay, so let's get into this one now. So we got the shooting star and the hammer. All right. So the hammer is actually very similar to the ones. The shooting star and the hammer are actually very similar to the ones that we just went over doji-wise, right? Which would be the gravestone and the dragonfly. The difference is that when you're looking at those versus this, these actually have a body. So there's an actual body that forms with these candles, opposed to the gravestone and the dragonfly. So the gravestone and dragonfly have little to no body, right? Which is going to obviously indicate indecision, right? Whereas these candlesticks here actually do have a body, okay? So if you're looking at a hammer, for example, the hammer forms when sellers, all right, push the market lower after the open. So you guys see here, this candlestick opened right here. The sellers push this all the way down. So we got this long shadow or this long wick to the bottom. Okay. But they get rejected by the buyers. So the markets close higher than the lowest price. Okay. So even though price got all the way down to this area here, the buyers were able to push it all the way back up. All right. And it closed in a buyer's market. It closed in a buyer's market. So typically you want to see that hammer close higher than the open. Okay. Does that make sense? So like somebody might look at this, you didn't realize, but if you look, the hammer closed higher than the actual open. So the open was here. See that? Open. Boom, and it closed higher. That is another key indication of markets reversing. So you're seeing that they can't maintain that sell, power, shoots back up, and not only does it shoot up, but it closes in a buyer's market. All right. The shooting star is the same thing, but on the opposite side. So the hammer you're going to find at the bottom of the market. The shooting star you're going to find at the top of the market. And what it is it's the same exact formation, but upside down. So think of a hammer. We all know the hammer has the handle on the bottom. Boom. Shooting star is coming from the sky and it's dropping down. So that's exactly what's happening right here. In this area, this is going to be found at the top of a market. It's where the buyers are, obviously, the market is in a buyer's market. It's moving up, it's moving up, it's moving up. And then you get the shooting star candle. And what the shooting star candle shows you is that the buyers attempted to continue to push the markets up, but didn't have enough momentum to do so. There wasn't enough strength in that buyer's market to do so. So what ended up happening is that sellers took over and they pushed the markets back down before that candle closed. Not only did they push the markets back down before the candle closed, but they closed that candle out in a seller's candle. So it became a bearish candle. Okay, so you see markets are shooting up. We got this huge shadow to the top, or a big wick to the top. It comes back down and it closes lower than the open. It closes lower than the open. So this isn't indecision, because you can see here a clear push to a specific side. That's what you want to see with these reversals. You want to see a clear push to a specific side. And if you don't see the push to that side, you didn't get the reversal. So sometimes we'll look at the market and we might identify something that looks like a shooting star. So maybe there's a huge wick to the top, and maybe, you know, the markets do fall back down, but they don't close bearish. If they don't close bearish, it's not a shooting star. So if the shooting star formation, for example, is something that you're using in your trading strategy, then you have to be aware of what it is that you should be looking for. It's not just a huge wick on the top and the markets fall. You want to see, for the maximum potential of this, you want to see that candle close out bearish for you to be looking for those sells. All right? Are you guys following me? Does that make sense? Let me know. Let me know. All right. If you guys are still on with me, by the way, if you're still on with me right now and you haven't done so already, go ahead and drop a like. All right. Drop a like for us on the video. All right. So we can get more people on this. All right. So those are all pretty, I would say those are all pretty, you know, pretty simple. They're pretty simple stuff. Pretty simple cheat reversals that you guys can use. And like I said, there's not a lot. I know there's 6, but essentially a few of them are just the opposites of the one that you guys are already familiar with. I'm going to pull something up for you guys real quick. Stay with me. I'm going to pull this up real quick. All right, so I got this cheat sheet for you guys as well. If you're already in the Discord, you probably got this sent to you already. But I'm going to pull it up again for you guys so you can see it. All right. So we got this reversal cheat sheet for you guys as well. So another session, just giving you guys some free stuff here, right? So I love cheat sheets. I've used cheat sheets a lot in my trading, especially as someone that was a brand new beginner. So that's why I provide them for you guys, because I think they help. You know, like I said, whether you print them out, whether you put them as a screensaver, it's completely up to you, right? But put together this cheat sheet, made it myself. I'm not the graphics guy, but I tried, right? And it pretty much breaks out what it is that we went over today with a few extra ones. So for example, we didn't go over tweezer tops and tweezer bottoms today, but I do have that here on the cheat sheet for you guys. So tweezer tops and tweezer bottoms should be equal. The shadows are the wicks, just about equal wicks, okay? But if you're going down, then you got one bearish and one bullish, okay? Equal wick side, shoots back up, boom. All right, tweezer tops. And then you have the tweezer bottoms, and then you have the tweezer tops as well, which is the opposite side. Okay, so this is actually a 2-page PDF. The first page is just the reversal cheat sheet part. So it's teaching you a little bit about each reversal, what they look like. And then the second page is giving you more of a visual. So these are chart examples that you guys can utilize as well. And here's the tweezer bottoms and tweezer tops examples. All right. You guys got any questions on that? Any questions on what we went over today? All right. So if you're in the Discord, right, you'll get access to this. This is something that you got access to if you're in the Discord already. It should have been sent out to you. If it wasn't, just let me know, and I'll go ahead and I'll send it out to everybody. But again, just another free tool for you guys, free resource for you guys to be able to utilize. So really simple session for today, guys. Like I said, just breezing through some candlesticks with you guys. I think the way to get the most out of this session right here is to, one, rewatch it, but two, start to implement it. Try to identify these candlesticks, not all of them at once. I would say focus in, whether it be day by day or week by week, as you're trading, focus in on a few of them. Focus in on engulfing, focus in on dojis, right? Get good at those. Then move to like hammers and shooting stars, those types of things. That's the way that I learned. It was little by little until they became second nature. And obviously, if you don't already have cheat sheets and stuff like that that you use, I would also recommend, as you guys are trading, as I told you before, you know, just have them around, whether they be your screensaver, your wallpaper, whether you print them out and have them at your trading desk, whether you draw them up. I remember I used to have a notebook where I used to draw up the different reversals. I used to draw them, and I would write down what it is that I'm looking for with these reversals. And that would help me out, right? This is when I couldn't print. I didn't have a printer, and I didn't have money to go print it in New York, right? So I just drew them, you know, made my life a little easier, okay? But with that being said, guys, all in all, we're kind of wrapping it up for today. It doesn't seem like there's any questions, so, you know, just come back, rewatch it. If you guys do come up with any questions, feel free to ask me in the Discord chat. We can definitely communicate. That's why, by the way, that's why I moved from Discord, from Telegram to Discord, is to be able to communicate with you guys a lot more and actually get back to y'all. So, you know, I know a few of you guys were messaging me on Telegram. A few of you guys were in the Telegram channel. We are phasing out the Telegram channel. And again, we're moving everybody to Discord, and we're continuing to kind of build on the Discord. So we will have not only live streams there, obviously I'll be in the Discord chats. There's also voice chats that we can communicate in. And there's also, there's another chat in there where, you know, as I'm trading, sometimes I'll be sharing my screen, but there's a Forex and chill kind of voice chat in there as well that we can just go in there. And if you guys are trading, or if anyone's trading, y'all can all trade together. We can all trade together and have some fun. Like I said, we're all around just building a pretty solid trading community. Okay. We're one away, by the way, one away from 100 in the Discord. So if you're not in Discord and you're on this, go join that, be the 100th person in there. And I might give away some money. I think we'll wrap it up with that. I'll probably give away $100. We'll give $100 away to somebody in the Discord when we go ahead and hit 100 members in the Discord. All right. So with that being said, guys, have a blessed night. This is your boy Rico, aka RockStarrFX. I'm out.